This, of course, as tariffs ranging from 10% to 50% are expected to have a huge effect on the sector. A majority of tech imported to the U.S. is made in Asian countries like China, Vietnam, and India. Joining us now to discuss how tariffs will affect U.S. consumers is Shawn DuBravac, the chief economist at IPC. It's a global association for electronics manufacturing. So, Shawn, we're talking about all kinds of consumer tech here: cell phones, laptops, gaming consoles. By and large, where are these things made? You know, in these tariffed countries, we know, but what kind of percentages are we talking about here?
You're talking about a very large percentage coming from overseas, as you already noted. China is a main supplier of electronics to the United States, but so are other countries that are impacted by the tariffs that were announced yesterday, places like Vietnam, India. Overall, I would anticipate if things continue the way they are, that we could see prices increase for a number of these products close to 50%. So you could have a quite significant jump in prices in the coming months as a result of these new tariffs.
Is there any way of quantifying what people maybe can expect, Shawn?
Yeah, if you look at laptops, we're probably looking at just under 48% increases in prices. Again, because laptops are primarily coming from places like China and Vietnam. Smartphones, we anticipate a 48.8% jump in prices. Video game consoles, just under 50% jump in prices. So you anticipate a big jump in finished goods. And then there's also a lot of components that are coming from overseas. And those components are being built into electronics products that may be produced here in the United States, both for consumers and for broader industry, for defense, for aerospace. And so it isn't just the consumer electronics products that are manufactured overseas that will drive prices up, but also the increased cost of components will drive up domestically produced products as well.
I mean, this is pretty incredible, the increases that you're talking about. I thought it was interesting, a recent survey that you all did kind of got an idea as to what companies were trying to do to deal with this. And you found that 31% of manufacturers had invested in automation or optimization to try to counteract the effect of tariffs. 28% had switched to non-tariff suppliers, although that's kind of out the window now, right? Because everybody's now tariffed. But what kind of things can they do to manage around this going forward? What are you seeing them do in real time?
Yeah, you're seeing electronics manufacturers around the globe really try to address these price increases. As you noted, our research finds that they're looking at alternative sources. They were looking at alternative ways of keeping price increases from moving through the supply chain. And at the same time, it will be impossible to address all of these cost increases. They won't be able to absorb them all. And at the end of the day, you will see these price increases pushed further down in the supply chain to the end user. Sometimes that's the consumer. Sometimes, again, that might be a business if you're thinking about aerospace or defense, where those costs have gone up as well.
And Shawn, we had an earlier guest today talking about that it wasn't necessarily the what that the market and manufacturers, et cetera, were opposed to. It's the how. In other words, the idea of reshoring some production maybe is a good idea. It's that, is this the right way to do it? And I'm curious if that's something that you're hearing from your members, and if so, what would be the right way to do it in their view?
I think one of the biggest challenges that I see with our members, with electronics manufacturers, both here in the U.S. and elsewhere, is the dealing with the uncertainty factor. They can start to operate in a known environment and address things as they exist. The challenge that they are confronting is that things continuously change, and they're having to reconsider what approaches to take. And I think not just for consumer electronics manufacturers or electronics manufacturers broadly, but every industry is dealing with this degree of uncertainty in how to address a changing spectrum of challenges.
But I guess even if there is certainty, if the certainty is, for example, 54% tariffs or 46% tariffs or, whatever, even 20% tariffs, it's not great, right? If you have the certainty and it's that bad, it's still tough to manage.
Yeah, and I think that the other challenge to make note of is that tariffs impact not only products differently, but they impact different priced products differently. So, for example, a high-priced product might have a little more margin in it, and as a result, you can absorb some of those price increases before passing them on. Lower-priced products generally have much lower margins, and it's much harder to absorb those price increases that you might see from tariffs, and so you end up passing on a larger share of those tariffs. And so I think one of the challenges and ultimately one of the risks for U.S. consumers is that the products that will be impacted the most are the lower priced products, which might be impacting a certain household in the U.S. that's looking for cost savings or that doesn't have the funds to spend on higher priced products, and they are at risk of being impacted the hardest.
Shawn, thank you so much. Appreciate it.